Good morning, everyone. This is Leslie Jouflas with Trading Live Online, and welcome back to your Daily Five. This is a segment where we have about 10 minutes to present about five charts. Sometimes I kind of tweak those numbers a little bit. So here's how you can get a hold of me. There's my website, and here's my email if you'd like to send me an email. Questions I try and answer in the comments that I see on YouTube. Today, I want to talk about RSI and the bull and the bear ranges that this tends to form. I just did a presentation for a group. It was about an hour long, a week or so ago, and I thought it'd be kind of fun to do this in a condensed version. So I'll give you some references of where you can study this further if you like this concept. Now, I learned about this concept when I studied for the CMT exams several years ago. And Connie Brown's book, Technical Analysis for the Trading Professional, is where I first learned this concept. And in the book, she says, when the market's trend is about to reverse, so too will the oscillator ranges. Well, after studying this, you can find in advance clues when the markets are changing from bearish to bullish and bullish to bearish. Now, it's not evident on every swing of the RSI, but you can learn to identify these particular ranges. Now, Wills Wilder was the one that developed the RSI. He passed away last spring, but he just left us with just treasures of technical analysis. So the RSI is a momentum oscillator, and it measures the speed and change of the price movements. The It's measured against its own price history. So that's important to remember with this oscillator. And it generally travels between 0 and 100. And Wilder said that overbought is generally around 70, oversold around 30 or below. Now, I found that depending on what market and time frame you use, those numbers might vary a little bit. So, whatever you trade, just make sure you're watching to see what's working in that market. And this is fractal, so any time frame you can use this concept on. And then Andrew Cardwell introduced the positive and negative reversals for RSI. We're not going to be able to get into those today, but I think you can probably look that up on the StockCharts TV, and I bet he's probably got something on that there. So the bullish ranges are generally in the 40 to 80 zone, and the bearish 30 to 65. And the default is 14 days on the RSI. And again, that's something that you can sort of look at on the charts that you use and the market securities that you trade. So there are times that the market will appear overbought or oversold, but it might be that these ranges are changing from bearish to bullish, bullish to bearish, and that's going to affect those overbought and oversold readings because that's one of the signals that can be used with the RSI, but sometimes that one doesn't work well, especially when it's changing ranges. So let's take a look at this example symbol GBTC. This is from StockCharts. And back on May 25th, I think it was, May 25th, I did a segment on your Daily Five saying that Bitcoin, no new highs coming soon for Bitcoin. And this was one of the charts that I used, and I showed examples of patterns on that. So let's walk through this chart here. Let's start on the left. And we can see over here as the price made, slightly new high, there's a bearish divergence. This is classic oscillator RSI. Well, as the market declined down here, made a new low, down here, we can see the RSI going into a range. Now, keeping in mind that the 40 level is usually about the lower end of the bullish range, here it's still in the bearish range, but it's still hovering below that 40 mark, right forming this range. Now, as it comes out of this range, it's changing from a bearish to a bullish range. We can see a little gap up on the chart here. There was the patterns I use, an A, B, C, D buy pattern. That's also a butterfly buy pattern. So I can combine this RSI work with the pattern recognition that I use really easily. So as the price traveled up in a strong move to the upside, of course, you can't see this upside, if your price is here. You can only see these in hindsight. So that's what makes this a really valuable concept to be using. But as you see, the oscillator comes up to an overbought position here, but look where we are with the price. And we can see the history now of the price. And you can see that the overbought signal on here was not a good signal. That's because of the new change in the zones going from the bearish to the bullish. And so I found that those signals tend to not work well when you can identify that you have changed ranges, either from bullish to bearish or bearish to bullish. Okay, so here, if we just kind of move along here, the next thing I'd like to point out on this particular chart, as the market was getting up to these highs here, you can see that the RSI started to show, lower highs here, but this smaller range that formed was really a clue that the market was running out of the bullishness, but the sentiment was just extremely bullish up around here. But you can see that this is starting to form a bearish range. And then this dash line is showing the support area of the RSI, and it breaks that, and we have a trend change from bull to bear. So it's not recently, and let me go to the next chart. This symbol did change. Over here, we can see we're still in the bearish range, still in the bearish range on the RSI, and now a break above that range and a good size rally on GBTC. And again, just here's some of the patterns that I use with the RSI. So let's move on now to the next chart. And this is the US dollar to the Japanese yen. And this shows a history of the transitions from the bear to bull and bull to bear ranges. And I've marked in a few of the patterns that I use so you can see how these work. They really work beautifully with these transitions. You also notice some divergences within the bear or the bull phases, such as the bidivergences on the left. So over here, you can see there's the bearish price action coming down. The RSI is in a bearish mode. You can see kind of back here where the RSI broke, went to the bearish, formed the range here, and now here's a ABCD buy pattern, breaks above that, and here's a little test. Here, the RSI is not declining below where the highs of the bearish range was. That's a very bullish signal. And then the price, of course, kind of moves strongly to the upside. Well, this is a butterfly sell pattern. And as this butterfly sell pattern started to have a turn to the downside, really here where this price tried to get up to highs, we can see the RSI is not acting in a bullish way. However, it was still on that support level around that 40-ish area. But here's where the RSI breaks that support, and we see a large drop in that market. It's still in a bearish phase as the RSI corrects up. Gartley sell pattern forms, ABCD sell pattern forms. This is a pretty clear example, I think, using the chart of GE, where I've got this underlined, this range that GE was in. We go back here, there's an ABCD buy pattern here. You can see the RSI using that concept has already been sort of climbing up and forming a higher range here, still in the bearish area, but you can see the lows of the RSI is starting to show they're not dragging down here on the bottom anymore. So as the price comes up here, you can see the RSI pop up, forms another range with this sideways movement. And then again, here it has a little breakout where it retests right here and it's not able to decline further. You can see the price had this little decline here. That's a bullish signal there. And then recently, GE had been in another range here. It formed an ABCD buy pattern. It looked like it was going to break out up here, but you can see the RSI just could not continue the bullishness and declined. But now this range has changed now from the bearish back up to the bullish. But I just really wanted to show you this really clear example of the RSI on here. Okay, I think I've got one more chart here. So on July 6th, I did a segment on your daily five using 5 charts of the triple Qs. So this is an intraday chart. The D is showing where a sell pattern completed on one of the larger time frames. So and you can look up that segment and you'll be able to see the pattern that I was referring to and analyze it on 5 different time frames. But here you can see the RSI. Actually, here you can see a head and shoulders pattern, and the RSI will form kind of classic technical analysis patterns. But here where the price tried to pop up to a new high, had a gap up right here. Look at the RSI. It's in a bearish range here. And so that's an indication that the market's run out of steam to the upside. And then we can see here as the price starts to decline, these little rally attempts, the RSI is just not making any progress to the upside, and it's now in a bearish phase. And it kind of bottoms out here, and we're still trading now within this range on the Qs. So we'll see what happens. I suspect that the market is in a process right now of transitioning from the bullish into bearish, and we're seeing it first on these lower time frames. Okay, so I've gone over my time today, but if you like this type of pattern recognition, this type of work, you can go to my website. This is an introductory course. See if you like this kind of stuff. If you really like it, look at the self-study course. That you'll get a lot of materials that are using this indicator as well. Well, thank you very much for joining me today. I hope you found something valuable with this, and I'll see you on your next Daily 5 segment.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.